Now see the sum here. The best way of doing this numerical by income and expenditure method is put the formula first and then put the values. It becomes much easier. So to do income method, I told you what all the values, standard values we'll be using: COE plus rent plus royalty plus interest plus profits plus mixed income. These 6 values. If you add up these things, you get ND paid factor cost, which is nothing but domestic income. To this you add net factor income from abroad, you get national income. You can find out gross income, you can find out at factor cost, you can find out at market price, depending upon what they asked you. Look at this one here, what we did here to calculate GNP at market price by income method. Don't forget to write rupees in crores. Rupees in crores. We put to here, these values, we'll take it later. Compensation of employees. To this you will be adding rent plus royalty plus interest plus profits plus mixed income of self-employed. When you add up all these things, you get ND paid factor cost, which is nothing but domestic income. To this you add net factor income from abroad, you get NN paid factor cost or national income. To this you add consumption of fixed capital or depreciation, you get GN paid factor cost. To this you add NIT, you get GN paid market price. We did nothing, we just picked up the values from the sum. So compensation of employees given as 100. Rent is given to you as 20. Royalty is not given, but there is no harm in writing in the formula. Otherwise you can ignore royalty. Since they are not given you, we taken it as 0. Interest is given as 10. We picked it up. Profits are given as 10. We picked it up. And mixed income is 110. You add up all these values, 100 plus 20 plus 0 plus 10 plus 10 plus 110, you get 250, which is nothing but net domestic product at factor cost or domestic income. To this we add NFIA. Normally we add net factor income from abroad, but the value is given as plus, value is given as minus. So plus minus minus, minus 20, we subtracted it from 250, it becomes 230. This is your national income or NNP at factor cost. To this we are adding consumption of fixed capital or depreciation because they asked you to find out gross value. So 20 is given to you, depreciation, this becomes GNP at FC becomes 250. So now this is at factor cost, but we need that market price. To this you add NIT. NIT we added is given to you 30. So GNP at, this is GNP at not factor cost, this is at market price is 280, GNP at market price. So this is the income method, expenditure method. I'll just explain you. COE plus rent plus royalty plus interest plus profits plus mixed income will give you ND paid factor cost. Through this you add NFIA, you get net factor income from abroad, you get NN paid factor cost or national income. So from this you can find out all the other values. Now we'll see expenditure method. So the best way of doing numericals in national income accounting is first to apply the formula and pick up the values. It becomes much easier. In expenditure method, we basically take 4 expenditures. Which are these 4 expenditures to get GDP at market price? Private final consumption expenditure. To this you add government final consumption expenditure. To this you add gross domestic capital formation. To this you add net exports. Straightway, by summing up all these 4 expenditures, you get GDP at market price. From GDP at market price, you can find out anything you like it. If you subtract from this NIT, you get GDP at factor cost. If you subtract depreciation, NDP at factor cost. If you add NFIA, net factor income from abroad, you get national income. So let's see here, in our sum, they are asking you to calculate GNP at market price. So let's first put the values here by expenditure method. One is private final consumption expenditure is given to you as 200. Government final consumption expenditure is given to you as 50. Gross domestic capital formation, GDCF. It has two components. Gross domestic capital formation is equal to gross domestic fixed capital formation plus change in stock. If they given you GDCF, don't take change in stock. If they given you net domestic fixed capital formation, add depreciation to that, and if they given you fixed capital formation, definitely you add change in stock. So gross domestic capital formation, it's a complete. GDCF is 60, take it. Net exports will be adding, but in our sum they are given you net imports. If net imports are given, you always take it as negative, minus. Net imports is a positive value, net exports is a positive value, net imports is given, take it as negative value. Like net factor income from abroad can be positive, net factor income from abroad can be negative, what they are given in the sum. In case of net exports are always positive, net imports is negative value. So net exports, we add it normally, but the value is net imports, so we subtract. By adding up all these things, you get gross domestic product at market price, that is 300. To this you add, we want to GNP at market price, national product. So to this you add NFIA, add it, but NFIA is minus, so 20. So GNP at market price is 280 crores. So by both income and expenditure method, the answer is tallying rupees 280 crores. The sum is right. This is income and expenditure method. We'll do more sums. Keep practicing. Till we meet next time, is goodbye from Saddam Hussein. Don't forget to subscribe. Keep watching all the videos. Definitely they'll benefit you for your exams. Best of luck for your board exams. Bye-bye.